Negotiating a lower interest rate on your credit card can save you money and help you pay off your debt faster. While credit card companies may not advertise the possibility, many are open to negotiation, especially if you have a strong payment history and good credit. By following the right steps and being well prepared, you can lower your interest rate, reduce your financial burden, and make your debt more manageable. We'll walk you through the key strategies for negotiating lower credit card interest rates and the factors that will increase your chances of success. Today, we will talk about how to negotiate lower interest rates on credit cards. So before we start, make sure to hit the like button and subscribe to my channel. 1. Know your current rate and credit score. Before you contact your credit card issuer, it's essential to know the interest rate you're currently being charged. Review your most recent credit card statement to find this information, or check your account online. Your interest rate, often referred to as the APR, can vary based on the type of transaction, purchases, balance transfers, or cash advances, so understand which rate applies to your current balance. Your credit score plays a significant role in how much leverage you have in negotiating. A higher credit score, usually 700 or above, will make you a more attractive borrower to lenders, giving you a better chance of securing a lower rate. If you're unsure of your score, it's a good idea to check it before you call, as having up-to-date information will help you in the negotiation process. 2. Research comparable credit card offers. One way to bolster your case for a lower interest rate is to research competitive offers from other credit card issuers. If you find a card offering a lower interest rate, or a special promotional rate, EG, 0% APR on balance transfers, use that information as leverage. Credit card companies don't want to lose customers to competitors, so having this data can work to your advantage. For instance, if you find a card offering a lower rate for balance transfers, mention that to your current issuer and explain that you are considering switching cards unless they can match or beat the offer. Make sure the offer you mention is legitimate and not too promotional or hard to qualify for, as your issuer may ask for proof of the offer. 3. Understand your current situation. Before initiating the negotiation, take stock of your own financial situation and relationship with your current credit card issuer. If you have a long history of on-time payments and responsible credit card usage, emphasize this when making your request. Lenders are more likely to offer lower interest rates to customers who have demonstrated good payment behavior over time. However, if you've missed payments in the past or carried a high balance for an extended period, it might be harder to get a reduced rate. In that case, focusing on your improved financial habits and willingness to pay down the balance may help your case. 4. Make the call or send the request. When you feel prepared, it's time to contact your credit card issuer. You can do this either by calling the customer service number on the back of your credit card or by sending a written request. It's usually recommended to call, as it allows you to have a direct conversation and handle any potential follow-up questions right away. 5. Consider balance transfers or other options. If the credit card issuer refuses to lower your interest rate or offers only a slight reduction, consider other alternatives, such as a balance transfer. Many credit cards offer 0% APR for balance transfers for an introductory period, EG, 12 to 18 months. This can give you time to pay off your debt without accruing interest, saving you money in the long run. Be sure to read the fine print on balance transfer fees though, as they can negate some of the savings if too high. If balance transfers aren't an option, some cardholders may be able to negotiate for other perks, such as waived fees or increased credit limits, which can help in paying down the balance. Some issuers may offer hardship programs that temporarily lower your interest rate or provide flexible payment plans during difficult financial times, so inquire about these options. 6. Review the terms of the agreement. If you successfully negotiate a lower interest rate, be sure to get the new terms in writing, either through an updated account statement or a letter from your credit card issuer. Review the agreement thoroughly to ensure that the lower rate will apply to both new purchases and existing balances, as some issuers may offer a reduction only for new transactions. Also, Check if there are any limits on how long the lower rate will last, as it may be temporary or part of a promotional offer that expires after a few months. 7. Monitor your account regularly. Once your interest rate is reduced, it's essential to stay on top of your credit card payments and monitor your account regularly. Continue to make more than the minimum payment whenever possible, and avoid carrying high balances that can quickly accumulate interest. If you ever find yourself falling behind on payments or struggling to manage your debt, consider reaching out to a credit counselor or exploring other debt management strategies, such as debt consolidation. 8. Know when to walk away. Sometimes, despite your best efforts, your credit card issuer may refuse to lower your interest rate. If this happens, it might be time to consider other options. You can explore transferring your balance to a different credit card with a lower interest rate or even a 0% balance transfer offer. Alternatively, you may want to consider a personal loan with better terms to consolidate your credit card debt. These options can provide financial relief, and they give you the opportunity to reduce your interest payments over time. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.